let me tell you where I think silver is going to go.
All right.
In the next 6 months, it's going to go minimum $85. If you look at the cup and handle formation, there's been two.
$50 silver, $4,000 gold. What seemed like only a fantasy 1 year ago now seems like an increasing probability. Today, I'm joined by John Lee. He's a successful entrepreneur, executive in the mining sector, and he's going to share with us some exciting developments at one of his newer companies that has to do with a critical mineral fluorspar. We're going to learn all about that. We're going to start out talking about what's happened in the precious metal sector and what John sees going forward. He's definitely one of the sharpest analytical minds. John, welcome back to Ron's Basement.
Glad to be back, Ron.
So we were talking before we went online. It's been exactly 1 year since you and I talked. And I look back, at that point, we had a $30 silver price and gold was significantly lower. What do you think has happened over the last year? And you have a real knack for making some accurate predictions. Any ideas where you think we might be heading with silver and gold?
Yeah, Ron, first of all, I remember not only 2.5 years ago, gold was $1,800.
Yeah.
And and silver has been a laggard, and we've been talking about it last year and the year before. The action of gold really taken me by a bit of a surprise that once it took out 1,800, it went straight to 2,200, and then it went to 2,800, which was my target 2 years ago, and lingered around that level for not too long, and then right up to $3,400 level. So I think it's not only taken the gold's action is not only taken by by surprise, but by some of the other analysts as well. And now gold is at 3,800, and my target for gold about 6 months ago was $3,500 level, which is a 200-day moving average. But yet it didn't really consolidate there for too long before embarking on another rally. And what we're witnessing now let's talk about gold first of all, is it is now in an entire. It's a maverick. It's entire its own elements, and on just about any ratio that you can think of in terms of gold to silver ratio, gold to platinum ratio, gold to oil ratio, has all superseded expectations, and there is no letting down. Gold's action is very, very strong, indicates physical buying, and the reason I say that, Ron, is that typically gold trades, at least at a short-term basis, inverse of the dollar. But what you're seeing now, gold is going up when the dollar's up, when the dollar's down, when there's war, there's no war, when the equity is correcting versus when the equity is not correcting. So it just and the gold is very strong across London and Asian Open, as well as COMEX New York Open. And what we're seeing now is gold is entering into what probably is going to be the blow off phase. I was just on another show a month ago when gold was 3,500. I said once gold takes out 3,800. It's going to enter into that exponential blow off phase. And sure enough, we're not even a month, we're already at 3,900. And then if you look at historically, there's probably the only analogy I can draw is if you look at the gold window in 1972, that's $35, and took gold about 10 years to get to a 800, which is around 25 times when the rally started, when the gold window was severed. And then if you look at this gold rally that started in 2000 when Gordon Brown, Bank of England, dumped that last batch of gold in England at $250, that was the start of a rally in year 2000, 2001. Even though there's not a gold window to be broken, but implicitly the gold has been very heavily managed by the cartels. So if you to extrapolate, if you to take the 1970s as a guide, and multiply the start point of $250 by 25 times, and you'll be getting to a level at around $5,000 to $6,000. Yeah. And what seemed like a fantasy or unbelievable, 4,000 to 6,000 is only 50% from here. Yeah. Certainly, it's going to be probably easier than it was from 1,800 to 3,600 in the blink of an eye. So right. I don't think it's too much to ask at all. And then if you ask about the reasons for that, Ron, you and I talked a year ago and 2 years ago. It's not to do with inflation. Oil is at $62.
Mm-hmm.
It's not to do with the war, because the war are the simmering down. They're not being escalated. It's really got to do with the micro mandates, the central bank digital currency, that's going to dictate on where you buy things and when you buy things and where you buy things. And the centi-billionaires and the billionaires, the Jeff Bezos, the Elon Musk, the Koch brothers, the Zeras, right, the Saudis, they don't want to be part of that game of being told what to do. And so the only way to circumvent that is gold. Think of a way like with the advent of carbon credits and central bank digital currency, there's going to be a situation in the next foreseeable future, before 2028 or 2030 for sure, that you cannot visit the restaurants you want to visit, and you can't go to the places you want to go because it's members only. Think of it as like a Michelin's club. It's invitation only. And then the way they go about doing that is imposing carbon credits and micro mandates through the CBDCs. So a lot of people don't want to put up with it. They're neither Republican, they're neither red or blue. They just want to preserve their living standards, and that's why you're seeing this continued bidding up of the gold of gold. So I think that's all in all. We can talk about silver if you like, but we can open for your comments and questions.
Yeah, it seems interesting to me because I follow the gold market very closely. That I agree with you, like you said, that we're moving into this new, I guess, digital potential control era. Number one, and people want to escape that. You mentioned, I wanted to ask you this question. You mentioned kind of the, I guess, for lack of a better way to describe them, the elites that are kind of moving to gold to protect themselves from that type of future. Do you think we've even begun to see, I live here in the United States. My neighbors don't talk about precious metals. Do you think that we could see in the coming 2 to 3 years more of the generalist investors moving into the mom and pops moving into precious metals, including gold and silver, and that could have a big impact on demand as well? I'd like to thank the sponsor of this video, First Mint. They're a silver mint located in Las Vegas, Nevada, creating world-class silver bullion products. As a matter of fact, here's a 5-ounce silver bar. You can check this out for yourself on their website, firstmint.com. Couple of things unique about First Mint. They're owned by First Majestic Silver, headed up by Keith Neumeyer. So they're getting the silver out of the ground to the mint, to you, from the mine to the mint. Again, you can check them out at firstmint.com. Thank you to First Mint for sponsoring Ron's Basement and sponsoring this video.
My mom is 80, and I have to drag her into the goldsmith to buy gold. So, and by and large, the middle class, the United States or China, they're in debt. They're not concerned about whether the dollar is blowing up or the price of gold or silver. And if you look at the junior market participation of the mining juniors, they're not near anywhere the peak. They're not even near the level that was 4 years ago when silver was $28 and gold was $1,800. So part of it's just a lot. There's a big hollowing out of the middle class, and there's a void to be filled. I'm 50, and and when I came into the space, it was year 2000. I have 25 years experience in mining, and the guys I looked up to, a lot of them either kicked the bucket or had long retired. So there's that void is yet to be filled by the Gen Zs and by the Gen X or by the Gen Ys, whatever you have. So there's just not a lot of discretionary capital of the middle class to get in the sector. They just worry about meeting their mortgage payments and credit card payments.
Eating.
and so I'm not seeing that level of feverish participation by the retail, and they're never going to really move the needle. What's really going to move the needle going into the blow off phase is some of these algo and speculative funds that would top up the phase, and some of the latecomers in maybe some Asians and some of these family office in planning in that technical allocation, regardless of the price. So I'm not seeing the FOMO yet, Ram. And like I said, gold is its own element. Nobody know how anybody would pretend to tell you what the top would be. is whatever is smoking, right? Like all the technical indicators are out.
Yeah.
However, as I mentioned, I would not be surprised to see at all for gold to take out to get to $5,500 to $6,000 range, which is around 50% from where we stand today. Within the next 6 to 12 months. And when you see that daily movement of $150 gold up and down, then you know that volatility is foretelling a potential top in place. But right now, I think we're around 5th or 6th inning. We're not quite. We're more than halfway through, but we're not quite there yet at the top.
Yeah. Very, very interesting. Yeah, I heard someone say a few days ago that I'd never thought about when it comes to gold and silver, that they kind of live by their own rules. And it got me thinking. I thought, well, maybe that's because they've been the store of value, money, whatever you want to call it, for thousands and thousands of years, that we can look at a lot of different factors. But at the end of the day, gold and silver really can behave independently of a lot of the relationships that I know I look at, and I think a lot of analysts look at, that we lose sight of that these are the original forms of stores of value and money.
They've always been, Ron. It's just been very heavily managed, because in order for the power that be to achieve their agenda of whether it's health mandate or own nothing and be happy, they have to continue to recruit their cronies, and the only way to do that is to pay them. but like the communists, they're always happy to use somebody else's money, and that money is via the printing machine. But if you have gold and silver, a real form of money, they're never going to take the gold or silver out of their pockets to finance their agenda. And that's why Elon Musk was talking about the 14 magic printers that they found, and that was just earlier this year with Doge. Right. And I've long been saying that there's a few machines out there, and nobody, like, the question should be asked is who's designing what kind of operating system, right? Who's designing the hardware? Who's designing the software? And I would not be surprised at all if some of the power that be are owning some of these machines and end up printing literally hundreds of billions of dollars on a daily basis to grab real assets, real estate, farmlands, S&P 500, and they're not branching into foreign markets like the Nikkei. It's taking an all-time high, but the economy is doing terrible. Like, I mean, China right now, it's a national holiday, but there's barely anybody on the street. I was in Hong Kong yesterday. I've never seen Hong Kong being so slow. There was nobody in the airport. And so there's definitely decoupling of the economies versus the stock market. And the only way to rationalize the performance of the equity market is that the kings are not playing by the rule. They have a printing machine, and they're printing and they're buying. I want to go back to a bit more about gold. Mm-hmm. You know, people are like, the mainstream media are not attributing a good reason to the uprise of gold, and that's why I think gold still have legs to come, because they're like, oil is like 60, and there's no financial crisis, and there's no really another war. So why is gold at 4,000? Nobody can really tell you that, and and that's another reason I think that gold still has some ways to go. Now, Ron, let me talk a bit about silver, which is really my passion. Yeah. Silver has been a laggard. I think when I come to your show last year, there are two reasons for it. One is China was going through the U.S. equivalent of financial crisis in 2011, with total collapse of the real estate market and economy having turned upside down. So a big portion of that speculative interest in silver from the Asians was taken out of the equation. And that's why you see gold from 1,800 to 2,500, but yet silver struggled to take out 30. And if you look at, say, 1980, right, when gold was 800, silver was 50. At 2011, when gold was 1,200, silver was 50, and yet gold goes double that. In 2011 level, yet silver was struggling on taking out 30. What happened was that I came on a couple of shows and also on my Twitter. In May is where the inflection point came. That there are two things happened in May of this year. First is that that there is a lot of people, silver bugs, waiting for gold to correct. There was, because the old adage, Ron, was that if when dollar rallies and gold corrects, and silver will amplify that correction. So people were waiting for that buying opportunity for silver back to the low 20s, and maybe for gold to go back to 2,200, or at least correct back to 2,800 from 3,300. So that will create an entry point for silver. It's never happened. So I think that in May of this year, what I saw was that the speculator realized, either through a tip or technical trends or whatever intel they had, that gold is never going to go down below 3,000 again. And that really say, okay, as the platinum made a run at that time as well as silver. So it's very clear to me that there was a technical reallocation, profit taking, or people that were waiting on the sideline to get into silver that started getting into silver in mass. And then if you look at the day-to-day action of silver, it also tells the same story, echoed the same story in May, where the dollar was going up, gold was going down, and silver was going up. And this is very, very rare, like you see once a decade type of scenarios. And it was just acting like a spoiled kid in defiance of all the red signs. It just get the marching order and just keep going. And that's what I said, that when silver took out $35 with vengeance, with conviction in May and June, I said, this is the time you rather be buying silver at 36 than to be buying silver at 34. Because every time when silver takes out 35, it goes to 50 in a hurry. And sure enough, that's exactly what we got. Yeah. It's taken a little bit longer because the last two occasions in 1980 and also in 2011, when silver take out 35, it went to 50 in 2 weeks. And the reason is the cartels were throwing everything they could on the silver market. And because the summer doldrum is a little lower liquidity, they were able to press that for just a few more weeks. However, bang, the start of September, guys came in from the Hamptons and they're just like, well, this is the only game in town as the silver. That's why silver went from a blink of an eye from 36 to 38 and then went to 41 and 43, and now we're at 48. What's really truly exciting now, let me tell you where I think silver is going to go. All right. In the next 6 months, it's going to go minimum $85. If you look at the cup and handle formation, there's been two cup and handle formation. One is in, I'll just pull up my chart. One is in year 2020, year 2000, when silver was $4, $2.50, $3 an ounce. So the neckline at that time was $7.50. I'm looking at the chart right now. In 1998, in 2004, the neckline was $7.50, and the bottom of the cup and handle formation was $3. So, and then when silver took out $7.50 in 2004, it went to $15 in a hurry. So essentially, you have that the flip on the other side. That if you look in terms of log scale, from 4 to 7.5, right? The neckline, it was a double, and then silver went then double from 7.5 in less than 2 years to 15. So now, if you fast forward to another very clear cup and handle formation, I don't know if you put up the chart, but this very clear cup and handle formation starting in 2011 when silver was 50, and then this cup went down as low as 13 to 15 in 2016, 2020, and now it's challenging the neckline again at 50. So if you extrapolate the downside on the linear scale, which is $50 minus 15, that's $35. And if you tag $35 to the $50 neckline, that will be $85. So $85 is the conservative scenario we'll be looking at in the next 6 to 12 months. But if you want to looking at an optimistic or aggressive target, then you'll be looking at log scale of this cup and handle formation, in which case the bottom of the formation was 15, the neckline was 50. So that's 3x. So if you want to flip to the other side, 3x from $50 neckline will be $150. So my hypothesis or my prophecy is that silver is going to be blowing off at around $85 to $150 level. 85 is the conservative target or goal that silver is embarking on sometime in 2026, either in March 2026 or in September of 2026. Ron?
John, I need to interrupt you because I'm on record multiple times over the last year predicting that by April Fool's Day, April 1st, that we would have $65 to $85 silver. And I just want you to know you have a lot of friends in my audience who are joining us right now who love to hear what you're saying. And one final thing, I don't know if you can see it. There it is right behind me. I have for fun, I have a little teddy bear. He's the silver bear, and he's blindfolded. And that blindfold
85, yes.
$85.
Well, there you go.
I had that. You can't see it, but to my right, I have another bear that was the gold bear. He was 2,500. People said I was crazy. People say I'm crazy for saying 85. I'm like, you don't understand. If you just look at multiple different ways to look at it, and like you just described with the cup and, I mean, the most epic cup and handle pattern, like this is real. And from so many perspectives, just from a quantitative numerical perspective, you know, like you said, $85 to $100 silver is very, very possible. First Mining Gold is a Canadian gold developer with 2 multi-million ounce projects in Canada, Springpole in Ontario and Du Parquet located in Quebec. Millions of ounces of gold in the ground in Canada moving through the permitting process. The company has zero debt and many big catalysts on the horizon.
That would be a conservative target. If you look at gold to silver ratio at a historically it rests on 70.
Yeah.
And then if you gold is already 4,000. So if you aim the gold to stay where it is, on a $50 gold to silver ratio, you're looking at $80. You're looking at $80 silver. So by all means and purpose, $80 silver is not stretching imagination at all. And as I said, it can potentially go to 150. So at a $4,000 gold and $150 silver, the ratio will be 30. And coincidentally, 30 is that bottom of the ratio when silver peaks. And then if you look at the mining company's performance, especially in silver, the likes of First Majestic are still not even half of what it was in 2021 peak. So that's another indicator that the speculative interest, people buying gold and silver physical are very different from people buying mining companies. So it's still at around third or fourth inning. However, you don't want to be playing cute and waiting to position yourself, because in the last phase, 80% of the gain is happening in that 20% of the time window. So the stock could double or triple the mining issuers in that mining blow off phase, kind of like NASDAQ when it went from 1,500 to 5,000 in early 2000. I was in that market. It was 6 months, and we are entering into that phase as we speak.
Yeah. But wait, there's more, because I want to ask you one more question to get your opinion to share with our audience about silver, and then we're going to embark on this journey to learn about your other company, CleanTech Vanadium and Fluorspar. That's fascinating. But my final question for you on silver, you know, we can look at all the technical reasons from a chart perspective and everything, why silver, but fundamentally too, there's just such a strong story when you look at just simply the supply of silver coming in to the market. And, you know, the mining sector, I think the silver mining sector had peak silver in 2016. But then when you look at the demand sector or the demand side of that equation, it's also equally as, you know, optimistic. Any comments on that, on the kind of the fundamental side of silver?
Yeah, Ron, I've said time and again, the market action, the price action is always dictated by the investment interest. It's never the industrial interest.
Okay.
And so silver, 70% of the silver is locked into industrials. And then typically when silver price goes, and as I mentioned, again, I think it was on your show before, that industrial demand would taper as the price goes up, as the market look for alternatives. But investment demand is the opposite. As the price is going up, people buy more. And to give another couple of examples would be, for example, the real estate market, the price of the real estate apartments, for example, in Asia or elsewhere, affordability was never a good indicator to call it the tops or bottom of the market. And if that's the case, how, you know, it would take a lifetime of earnings without being taxed in Asia, like Shanghai in Taiwan. Still, you couldn't afford a house. Same with Singapore. Another example would be oil during COVID went to negative. I mean, it's how is that possible? So just give you a flavor of that for metals, always the investment demand that drive the market. And so I wouldn't read too much about the industrial demand in solar, in whatever or else. And the other thing also to keep in mind how unpredictable silver could be is that gold and silver are a completely different animal. All the gold above ground are there. It's just the reason being just being. But if you look at silver, annual production of 1 billion ounces, of which around 300 million ounces are investment demand. So 300 million ounces of $50 silver is $15 billion. That's like a drop in the bucket, and that's why the Elon Musk and the Jeff Bezos couldn't get their hands on it, and they want to get into it. But when silver got to 100, then the really big game would start. So it could still become a self-fulfilling sort of a story for bigger fish to fry. And the same fundamentals for silver. For at 100 to go to 200 is no different from 50 to 100. If you look at cryptos, right? If the crypto could go to 10,000 or 100,000, why couldn't silver do the same? There's absolutely no reason not. And so I think all in all, I can't remember the next question because I got a bit of a hay fever here in China. But about silver's fundamentals. You can throw fundamentals out of the window. It's really musical chairs. It could be it'll keep going until people stop buying, and when people stop buying, nobody knows. If crypto could go to 100,000, why couldn't silver go to 1,000? I mean, realistically,
I know. I agree 100%. People, I think get trapped in this thinking about silver that it can never go to certain levels. Like there's no reason, like you said, that it can't go to those levels. So I know that you're the CEO of a silver mining company, Silver Elephant, but you're also CEO of another company, CleanTech Vanadium. And they have something that's really fascinating to me. I've been learning here over the last few days. I think I'm like most people. I really knew nothing about this critical mineral, fluorspar, and it's becoming going up in price and becoming more and more critical to a number of different industrial applications. Could you tell us about CleanTech Vanadium and this fluorspar project? I'm very interested to learn, and I think it'll be fascinating for our viewer as well.
Right. First of all, Ron, let me give a quick update on Silver Elephant because some of your audience are shareholders and have come to us. Unfortunately, since we came out of your program last year, and Elephant was doing very well with the silver project. It was 100 million ounces of silver in the ground. It's being production. It's making money. In 2024, the project Pulacayopaka produced over 1.5 million ounces of silver at a profit. Unfortunately, a major part of the mining concession was the production. Our rights to be mining that area was canceled by the government, and citing illegal mining. Some dark forces joined with the government to take our mining contract away from the government. And it's been almost 1 year since the license was since our right to mine the project was canceled. And so far, it's been a year. Nobody was able to produce any evidence of illegal mining whatsoever. Okay. So what we found was that there's some dark forces and invited guests that were working with the government to, and we are a victim or we're victimized as a result. However, I believe it's been going through a bit of a dark times in the last 12 months, and there's a new election that just came. And the second round is going to be middle of October. And I think there's going to be a change of government. And we're very optimistic. We remain very positive about getting our contract restated. I can't dictate the timing, but I just want to reassure your audience and some of our shareholders that there's absolutely no evidence of illegal mining whatsoever. Okay. And some of the bad actors in the government has been identified. And that we're optimistic that once there's a change of management, and that our case would be reviewed, and that the resolution to cancel our rights to mine the area, dedicated rights to mine the area would be restated. So we remain very optimistic. And the elephants, there's a small part of the area that's not under the contract with the government, of which we own the concession. So we started mining again. So the company is generating cash flow again. So that's very positive.
Good.
Now, on this Fluorspar initiative, which is what we started investigating under CleanTech, which is my other baby. So Fluorspar and silver were the only two babies I was looking at entire year. Just a bit of primer around Fluorspar is used in nuclear. It's really to do with modernization of the economy, especially in energy generation and storage. and as well as particularly energy generation and storage in that fluorspar, 6 fluorine, which is the element of which fluorspar is dig out of the ground and concentrated to, is required to enrich uranium. So you talk about uranium enrichment for nuclear and for weapons. It's all about taking the uranium out of the ground and then concentrating that uranium. To do that, you have to gasify the uranium, and the way to do that is to react fluorine with uranium, and once uranium is gasified, then you can go through the centrifuge of which you literally just kind of like a dryer, right? And then the lighter uranium, which is U-235, is fissile uranium, will be separated from the heavier plutonium uranium of U-238, and that is a fissile U-235 you need for that fission to take place, for the energy to be released. And then the other major use of fluorspar or fluorine is electrolyte. And you hear about the lithium electrolyte and sodium electrolyte. You hear about the cathode and the anode, the graphites and the cobalt. But what's not being mentioned is that electrolyte, which is hexafluorophosphate, and that is 6 fluorine, is required as a vehicle or as a conduit. It's what they call electrolyte for the ions, for the lithium and sodium to be moving back and forth between the cathode and the anode. So that 6 fluorine is required for every single lithium or every single sodium in respective lithium and sodium batteries. Fluorspar price has gone up 5 times since 2000. And what really flipped the switch and piqued my interest, Ron, is that China become a net importer of fluorspar since 2022. So they're running out of fluorspar, and the major part of the reason was the EV revolution. And so the EV electrolyte and energy storage for solar and for wind power, and together with nuclear enrichment, account for over 60% of the fluorine uses. So they're less than 5 years of fluorspar reserves left in China, and there's 50 years of reserves for rare earth. After the COVID restrictions lifted, China government gave a very strong mandate to start source fluorspar, because without fluorspar, there's no EV batteries. Without fluorspar, there's no energy storage to provide a base load from solar generated power. And without fluorspar, there's no uranium power. It's complete full stop. So they're going after Mongolian fluorspar, African fluorspar, and yet in the same time, United States is a bit oblivious, right? Kind of like lithium and kind of like rare earth. It's almost like when the collision, days before the collision happened, or the collision has already happened with the fender bender, that United States wake up and say, oh my God, and that US is now spending $1 billion on rare earth and $1 billion on antimony. And right now, fluorspar is still under the radar because Mexico is providing all the fluorspar that United States need. However, the discount between Mexico fluorspar and the Chinese fluorspar prices have all but evaporated because China became an importer, so Mexico has no more competition. And China and Mongolia account for 70% of the fluorspar production, and Mexico provides 10%. Nobody else does. So in essence, around in conclusion, that if the United States wants to be energy independent, want to create some AI force, require 4 times as much power, want to create EV electrolyte batteries from Elon Musk and from LGs, all these batteries need to be created. U.S. require 4 times more fluorspar than it does today, which is today's 500,000 tons. United States is going to need 2 million tons just to realize the dream of the artificial intelligence. Fluorspar is needed to etch the silicon wafers for the TSMCs and the NVIDIA, and then also the nuclear power and the solar power and EV batteries. But even at 2 million tons, that's 4 times what the United States is consuming. It's still a third of what China consumes. That's 7 million tons. And mathematically, there's not a 1 million ton excess of fluorspar in the market to accommodate the United States, not to mention the Koreans, the Japanese, the Germans, the Europeans, because they're running out of, there's no fluorspar coming out of China anymore. And that's why we're so excited to be embarking to this year for CleanTech to establish presence in the United States, and is in the Kentucky, Illinois belt. And that's where 95% of historical U.S. fluorspar came from until 1980, when China flooded the fluorspar market. Of course, the landscape is being turned upside down. So in just the last 3 years, fluorspar price has gone up more than 50%, trading at a $500 per ton. And my belief is that it's going to double in the next 3 years because there's no fluorspar out there, and China is setting the price trends. China is basically whatever price they will be taking all in, and right now they're just dialing up fluorspar prices steadily to try to first of all procure as much fluorspar as they can in stockpile, and secondly is to secure the remainder of fluorspar projects available in Africa before letting the dog out of the house, out of the doghouse. So the price right now, even though it's already gone up 50% from 3 years ago, it's entirely artificial. I can easily see double. Now, talk about CleanTech for a minute. CleanTech share price is more than five times already in the last 2 months since we acquired the project. More than 50% of the shares being traded in the market. And the insider holds about 50%. So basically, entire float of the market is being traded in the last 2 months. But right now, the market cap is still $25 million. It's if you look at MP Materials, their $10 billion market cap based on the rare earth project in California that's bankrupt recycled twice. And if you look at some of the antimony projects that were again being recycled through bankruptcy, and they're trading at $500 million to $1 billion range. And if you look at some of the uranium issuers, I don't know if you follow the uranium market, the limited dozen or so uranium mining issuers listed on the North American Stock Exchange, all of this between $500 million to $10 billion. So that market is forced to tackle in that Fluorspar is the Robin to the Batman. If the Batmans are in the billions of dollars, why shouldn't Robin be a tenth of that? And that will still spell for multiple times the valuation from where CleanTech is today.
Yeah. And this deposit is right in the middle of the United States. Are there any other fluorspar projects in the United States? Any other companies that are publicly traded in the United States?
Right. The biggest elephant in the room is this Illinois-Kentucky fluorspar belt district. And it's hundreds of kilometers long. So for gold investors, that'll be the Battle Mountain of Nevada. And in 2 short months, we've made 3 transactions, and we believe there's probably more to come. Already amassed 8,000 acres and 20 distinct deposits, all strategically located in major trends. So there are about 15 to 20 major trends in this fluorspar belt that measures 100 kilometers by 100 or 100 miles by 100 miles. So we've already have 15 deposits, and they're sitting on 15 different faults and trends. I would say CleanTech is probably one of the 3 largest players in that fluorspar belt. But right now, United States is limited to virtually no fluorspar domestic production. There are only 2 mining companies in North American Stock Exchange that has fluorspar projects in North America. So there's one other project in Utah, and they're about 3 times our market cap, CleanTech's market cap. And they've been talking about going to production, but yet to do so. Before said and done, CleanTech, based on today's historical resources, not being verified, and the reporting standards are not the current, but there are already 10 million tons of fluorspar resources in the ground. So that's about 20 times what the United States needs on an annual basis. And that's based on 740 drill holes. So we're very, very confident, first of all, that there is probably likely 10 million tons of resource in the ground based on drill results. And secondly, the drill holes are not even covering 10 to 20% of the known areas on this 8,000 acre mineralized area. So conceivably, the resource can double or more. And that probably is going to take a while, maybe beyond my lifetime, because the land package is so massive. And the resource, the endowment is so big. And that's why I come on a couple of other different shows that say that is the best opportunity in my lifetime of mining, doing mining for 20 years. And that was when when CleanTech was 5 cents, and it went to as high as 25 cents. It's now settling at around 15 cents, which creates a very, very good entry point. And again, Kentucky is a red state, mining friendly. There's no other industry. There's no farming. There's no tourism. There's no herding. There are no other industries. It's a historical mining town. So we're very confident of bring back the Renaissance and the glory past of Kentucky, Illinois belt, and looking to write histories of American fluorspar mining industry and provide and provide value add to the U.S. industries, the U.S. economy. I want to assure Ron that there's some questions about our intent, which is 100% serving the U.S. interest. We don't see a ton of fluorine and fluorspar going out of the U.S. And our customers are the major nuclear operators, the major chemical producers, and the battery electrolyte plants in the United States. In the United States.
And like you said, in that area is not too far, a couple hours from where I live. I know there's been a big history of mining in that area. I think there's even some processing plants in that area as well, if I remember correctly. Honeywell, maybe, and another company. And I know we've gone long, but I have to ask this question because I'm fascinated by this. I understand how silver, gold, coal, other things are mined out of the ground. Can you give me just a brief education on how fluorspar is? Obviously, it's dug out of the ground, but what's the process look like for mining fluorspar?
Yes, Kentucky does have a long histories of mining in coal, oil, and gas, as well as in fluorspar. So in this Kentucky, Illinois fluorspar district, over 30 million tons of fluorspar was dug out of the ground. And the glory past was in World War II when fluorspar is used for steel and aluminum making as a fluxing agent. So a lot of the fluorspar were churned out of the ground. And we just made a site visit there. There is millions of tons of waste and tailings materials, dozens of abandoned shafts and small orders of 30 to 50, like 100 feet, right? Shaft, very modest size. You can literally poke your eyes down there, you'll see fluorspar. So after the survey says, oh my God, this doesn't need a feasibility study to get the production restarted. And there are a number of abandoned mill sites of various states require rehabilitations. So what does one of our key initiative is looking at how we can fast track this to production. And there's $1 billion from Department of Energy dedicated. A lot of money is dedicated to reprocessing tailings and waste because then it eliminates reduce the cost of extraction, mining, and the permits associated with that. Honeywell, Alcoa, and DuPont, like all the major chemical producers for Teflons and for batteries, or for chemicals and for refrigerants and for fluxing agent for steel and also for nuclear reactors, they've all explored the area. But then the Mexicans sweet talked them out of mining vertical and by offering them discounts. So they abandoned their claims back in 2015 and left deserted. And that's why I think that was just like last train. CleanTech got on the last train and before it really took off, just in the last 12 months. So we'll try to accelerate the district back into production, either through toll milling opportunities or take one of these abandoned sites before and then put a mill and put it in action. So to answer your question, I will make sure is that the way you process fluorspar is very similar to how you process silver. So the fluorspar out of the ground is called the calcium fluoride, which is CaF2. So what you need to do is to concentrate that gray from 10 to 30% out of the ground to 80 to 95%. So once you get it concentrated to 80%, then you can do what they call the metallurgical fluorspar, chuck it into the aluminum and steel plant as a fluxing agent to get either way the impurities and provide that oxidation layer to prevent oxidation of the steel and aluminum. And then when you get to 95%, then they can sell that fluorspar CaF2 to calcium fluoride to the processing plant of which the fluorine is then produced. And once the fluorine is produced, it's highly corrosive, and highly reactive. So that fluorine needs to be very close to either the uranium plant or the chemical plant to produce the refrigerant, to produce the electrolyte, or to produce the uranium hexafluoride to fit into a nuclear reactor. So Honeywell has the nuclear reactors, and then there's also fluorine gas processing facilities very nearby this fluorspar district. Right?
Okay. One final quick question: if you had a little container with fluorspar in it that you could hold up right now, what would it look like?
It's beautiful. Fluorspar, a pure fluorspar cells, like I said, a little sample, a piece large, can fetch thousands of dollars.
Wow! It
is one of the most sought after gemstones by collectors. So, and it's very stable. The way I was keen to say fluorine. So fluorine is the most reactive corrosive element on the periodic table, and that's why it's what I call the Victoria's Secret model. That's why it was able to react where the bookworms even paid attention. That's why they're able to react with uranium, right? Pick the bookworm or the nerd is able to react and levitate that. But once it got married to say the fluorocarbons, and then that's how Teflon is created, right? Okay. And these coatings, because they become very, very, and also fluorocarbon is for refrigerant is created. So overall, Fluorspar is actually one of the gemstones, and I invite you to go to our website and go to CleanTech CTV's YouTube and look at some of the beautiful gemstones that are available. But that is not. I mean, that's just like icing on the top of souvenirs. That if you have to pay, shareholder happy to pay site visit, we will provide some samples for them to take home. But in the end, Fluorspar itself is. I don't know what the color Fluorspar look like. It's kind of like silver. It's like the native. Unless you see native silver, the stuff out of the ground, especially like silver oxide, it just looks like a pile of dirt. So it's hard to discern.
Gotcha. I want to share the CleanTech website. It's up on the screen right now. CleanTech CTV, which is the symbol on the Toronto Stock Exchange, and on the OTC, it's CTVFF. And while we're here, I will also share the other company that you're the CEO of that you talked of earlier, Silver Elephant. Yep, Silver Elephant Mining. It's going to be exciting to watch developments at both of those companies. And John, I'm really want to say thank you on behalf of myself, our viewer. We learned a lot today, right? We hear about prospects for $6,000 gold, $85 to $100 silver, and of course, you know, the exciting developments with Fluorspar and CleanTech. So thank you so much. Is there anything I forgot to ask you before we sign off?
Oh, not at all. I mean, Fluorspar is in the third inning. As I mentioned to you, that U.S. sometimes have to wait until like the house is on fire before doing something about it. But when they do, Trump has a very decisive sort of demeanor in tackling problem. They throw $1 billion on rare earth, another $1 billion on antimony. And so I would say this is like the second inning from the get-go for Fluorspar. And I highly recommend and encourage and that your audience check out. Just go to CleanTech CTV or just search Fluorspar. There is a wealth to learn, and the writing is on the wall because China is buying Fluorspar, and you're gonna see a slew of land grab currently is happening right now in real time, and then that epiphany moment is gonna come very sooner than later, and so I cannot think of a better time to come in this very interesting market of Fluorspar. So check us out.
Sounds great, John. Thank you again on behalf of myself and the community of people who joined us today to hear from you and learn from you. And hopefully we'll get together sooner than a full year from now and talk about higher precious metals prices and developments within the Fluorspar sector. Thank you.
Sit tight on silver. Don't sell by $50 or you know what? I'm very good at catching the bottom. It's like the reminiscent stock operator said, right? They see a lot of people. They can catch the bottom, but these are not the people that make the most money. It is now time to sit tight. The shovels out there. The time is the best time. The game only gets started when silver past 50. So this is not the end of the innings. This is the start of the fifth inning. So make sure you sit tight and enjoy the ride.
John, you took the words right out of my mouth. I've got that book sitting right over there. Sit tight and know you're right. Right? Don't get one of the greatest investment books of all time. So you have a great day, and we'll see you soon. Bye-bye.
Take care.